like you said, the issue, Dell's about to trip over a Scooby. Hello everyone, today is Wednesday, July the 12th, and in a not so surprising interest rate announcement today, we saw the increase of the prime rate by another quarter basis point, which brings the prime now today to what, Joe, 7.2%?
Yeah, that's the number. Highest it's been in 22 years.
Yeah, the 10th increase since they began this escapade is in March of 2022, sadly.
Yeah.
So what happened here today, Joe?
It's kind of a continuation of the same message we had in our last video. So the Bank of Canada is still, desperately trying to get inflation to their target number, 2%? Which is 2%. Yeah. The good news is it has come down since the high point of 8.1. We're down to 3.4. So that's a pretty big move in the right direction. It's just taking a lot longer than they had hoped for, than they had anticipated. There's probably two factors that are really driving that. The first is just consumer spending is still up. It's still high. And the other factor that's probably leading to that is that the job market is still remarkably strong. So what a lot of people thought would happen is these higher interest rates would drive the economy into a recession. You would start to see a slowdown, not have growth in the economy, and that would lead to job loss. That hasn't happened. The opposite has happened. Wages have increased. There's not the unemployment that they expected to see. So you're not seeing all of those recessionary pressures that would bring inflation down.
No, plain and simple. If everybody's working, everybody's making money, everyone's spending money.
Right.
And what are they trying to do here? They're trying to curb the spending to slow down inflation.
Yeah.
Not working.
So not working how they want it to. And I think this is also kind of a key message here is they had kind of said that they thought they would see the numbers and the targets get where they want them to be by 2024. We were thinking maybe by mid 2024 you would start to see an easing on these rate increases, maybe rates start to come back down. Their message today is pretty significant in what they're saying on when they think they'll actually hit their target. So what are they talking about now?
Well, they're moving the goalpost, as you would say. So
Yeah.
they're now saying that they're hoping that they could get this inflation down to that 2% mark in and around summer of 2025.
Right.
So we still have a bit of a road ahead.
Yeah, so
Right.
I think the key message here is we often are talking to clients or referral sources. They're saying, well, I think rates are going to come down next year. The messaging from the Bank of Canada is don't expect that. So we're probably in a period where we're going to have these higher interest rates for quite some time still. So if you do need to look at your options on locking in, if you're in a variable rate mortgage or if you're in a line of credit and the pinch of higher payments is getting to you, it's something to review anyway. It is something that I don't think you should take the approach that rates are just going to come down next year, because that's what I think is going to happen, because the messaging from the Bank of Canada and the data from what's actually happening in our market aren't indicating that that's happening anytime soon.
No, there is indication that it will happen,
Yeah.
but like you said, just not soon.
Right.
So again, interesting times. We'll see how this pans out and what this most recent increase does to inflation. And certainly if you have any questions, please do not hesitate to reach out to us, reach out to a broker. We're all here and happy to help. And one more thing, Joe, I have to comment. Great jacket choice
I was going
today.
to say the same thing. Looking good, man.
Thank you very much for watching.